Having quite an active day in the markets. Cryptos are pulling back along with the rest of pretty much every asset class, but it should come as no surprise because if you've been watching my channel, I've been projecting a downward pattern and we've been breaking supports across the entire crypto space. At this point, there's very few cryptos left that haven't broken their support. What do I mean by support? Well, most cryptos had their bottoms earlier this year and we had a bullish pattern developing, potentially bullish pattern. We had 3 waves up. That's what the orange nomenclature shows. And we had a 4th wave down, but then we start turning back down. We never got our 5th wave higher and we started breaking support, which is the origin point of this rally. So Ethereum Classic, along with Bitcoin and Ethereum, had their lows on January 24th, or in this case, January 22nd, right around there. Most altcoins had their lows on February 24th. So either way, those are both support zones. We've actually broken below our February 24th low, and it looks like we're well on our way to breaking below the lower support, which is at 21.23. That is the low we hit on January 24th. So in other words, we seem to be following through on our red pattern, and therefore our immediate upside setup is dead. It's invalidated. Now, that doesn't mean we don't have a big rally setup. We're going to touch on that later in this video, but up close, I've kind of rearranged this chart a little bit. Unlike some of the other coins, we didn't have this thing aligned with most of the coins. I'm going to shift to Bitcoin Cash because I've been using this as my main example of what the patterns have looked like. In Bitcoin Cash, we had a clear 5-wave impulse down. This is that's what we're marking as our first wave. That bottomed on April 11th. We had a very clean textbook looking second wave back up. And we've been following through exactly as you'd expect based on Elliott wave methodology. So while that bottom on April 11th, let's look at Ethereum Classic again. Ethereum Classic's first wave bottom was a few days earlier. Whether the bottom was back here or it was a little further ahead, it's not clear. I'm favoring this because if we have our bottom here, we didn't bounce enough for the second wave. No matter what the case is, however you interpret it, we have 1-2. We had a 1-2 set up to the downside, and we are in the midst of finishing this off. The way I have this interpreted, we are done with our third wave down. The 1.32 extension is a common target for your third wave down. If we take the lower low up here as our actual first wave down, then we project quite a bit lower, which means we were probably only getting to the 1.0 extension, which would be the third of the third. But I'm going to stick with this interpretation that we're pretty close to bottoming in the third wave, and our MACD is stretched pretty far down. So expect a little bit more follow through. We might see a bit of a consolidation in our fourth wave before our ultimate bottom takes us somewhere below $19. We could go as low as $16. Now, how does that align with the big picture chart? Well, like I mentioned, 1945 would be the upper edge of that box. Here we have about 14. That would be our ideal retracement point. So the top of the box aligns with the bottom of this range. So you never know. Maybe the other interpretation is better. Maybe this is actually the first wave down here. And if I bring that back down here, relatively shallow second wave bounce, it's a little too far down to project. So either way, expect somewhere in between there. So looking at the big picture, we are falling red. Red is my primary because we have broken supports in pretty much everything. Most of the coins, they all made new lows for 2022. There's a lot of panic in there. This is how C waves feel, especially when you're completing a long correction. Our correction in the case of Ethereum Classic is, well, I'm interpreting it as either a second or fourth wave. It's really tough to tell for sure. Big picture, we could be in a large diagonal pattern. So this could be interpreted either way. This could be the fourth wave down before fifth wave higher, or it could be the second wave with a third wave to come. We're not going to know for a while what the situation is, but either way, we're having signs of bottoming. Our MACD divergence is still there, although we're a bit stretched at the moment. We should get that reset relatively soon as we lose momentum to the downside. Our correction started in May of 2021. You have your A wave, your B wave bounce that topped in September, so a bit earlier than most of the other altcoins, which topped in November. And we've been in a really funky looking C wave diagonal kind of pattern. So I already have some fibs drawn out here. Based on this A wave, our C wave should get to about the 1.0 extension, which is at 1425. Should doesn't mean that it will. When we take our smaller picture and project that down, so right here, assuming we have our top in September, we have a first wave down, and I build our Fibonacci retracement. About 2379 would have been the ideal bottom. Could go down to 2057. Either way, any extension we get is going to really be a really tight rubber band stretch. So it should mean that we have an even more powerful reversal, especially because in Ethereum Classic, at least, this does look much more like an ending diagonal than most of our other coins. You can draw our trend channel line as I'm doing at the moment. And we're definitely about to cross back below the trend line. This is typical expected action in an ending diagonal where you expect us to have a throwover. Generally, the throwover is up when you have an ending diagonal going up. In this case, the ending diagonal is going downwards. So our throwover would be to the downside or action in the S&P 500 where we may be in some kind of an ending diagonal and we're about to spike down. We might see 39.50, 39.60. And really all these things are correlating together pretty closely. Honestly, all of pretty much every asset class. So we should see a reversal relatively quick. Don't panic. This has been my message throughout all of my updates on both cryptos and hedging and equities, all that stuff. This is how bottoms feel. Now, doesn't mean that we couldn't get a lower low. You guys have all the parameters set here. This target box is about where I'm expecting us to touch. We may or may not get there. Ethereum Classic does have the tendency to spike down and reverse very quickly. I've mentioned that Ethereum Classic has also become my earliest indicator of a sentiment shift because it seems to move the quickest and the most early and the most explosively, as evidenced by this powerful fourth wave. It looked like we were about to take off for a bigger rally. We didn't get that. So look for this to reverse relatively quickly. We may or may not make in the box. So start getting your buying plans ready. If you did unload any of your coins like I did, you're looking for a chance to buy the dip. We're seeing continued downside in Bitcoin, Ethereum, and all the other coins. We may see a bottom relatively soon because, again, it looks like we've accelerated a little bit. You tend to have downside acceleration, then you have some consolidation, more acceleration, etc. Bitcoin, of course, you can see is getting near that 1.32 extension. I typically recommend starting your purchases at right around that third wave bottom. And that is because there's never a guarantee that you're actually going to get that fourth wave bounce and then a fifth wave lower. So what I mean is that you got your 1, 2, third wave. It's a corrective wave. There's a lot. The bearish sentiment dries up very quickly. Once there's enough selling pressure, once the capitulation happens, the reversal comes very quickly. So there's no guarantee you get that higher fourth wave bounce and a fifth wave lower. So you could buy a tranche here. And if you get that lower low, that's another tranche. If you're a little bit more of a risk averse investor or trader, I would recommend waiting for your Elliott wave 1-2 setup. So we look for a 5-wave setup from where we are. So 1, 2, 3, 4, 5. I'm just drawing this arbitrarily, but we look for an impulse up. And then once you have your third wave or 3-wave pattern back down for a second wave, that is usually a good sign that you have a pretty good indication of a bottom. We want to rally through what we call our pivot, which is the 0.618 extension of whatever you have. So if we have our first wave up, second wave down, you want to make sure you get through the 0.618 and the 0.764 resistances overhead and stay above those. That is usually a very strong indicator and a confirmation that we're ready to rally. So keep your eyes peeled. We're getting very close to the bottom. We're going to reverse very quickly once we do bottom. So again, BTFD opportunity. I'll be putting up plenty more posts in video form as well as community post form, which I can get out more quickly. One other note, if you did hedge using BTO ETFs, things are looking pretty good today. Not sure if I'll release another video, but I did put a community post with some of the parameters there. Again, don't get attached to the bearishness. Feels like everything's crashing. Otherwise, you might be in denial when this thing reverses. Enjoy. Until next time, thank you for watching and happy trading.